Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Sinopec Engineering Group Co. Limited Annual Report. Sinopec Engineering Group Co. Limited provides a wide range of services to various industries through its four main segments: engineering, consulting and licensing, EPC contracting, construction, and equipment manufacturing. The company's engineering segment offers design, consulting, research and development, feasibility studies, and compliance certification services. Its EPC contracting segment provides integrated project management services, including engineering, procurement, construction, maintenance, and project management. In addition to these services, Sinopec Engineering also offers construction services, including infrastructure development, oil and gas storage, pipeline transportation, and large equipment lifting. The company's construction segment also provides renovation, expansion, repair, and maintenance services for various industries. The equipment manufacturing segment of the company designs, develops, manufactures, and sells equipment and spare parts for oil refining and chemical facilities. Sinopec Engineering also offers technical and equipment selling and leasing services, as well as medicine, pesticide, and chemical research services. The company serves a variety of industry sectors, including petrol refining, chemical engineering, aromatics, coal chemicals, inorganic and pharmaceutical chemicals, clean energy, storage and transportation facilities, environmental protection, energy saving, and others. Sinopec Engineering Group Co. Limited market capitalization of $29 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that Sinopec Engineering Group Co. Limited holds a significant advantage in their industry. Sinopec Engineering Group Co. Limited trades at a lower price-to-earnings ratio of 10 times and a lower price-to-book ratio of 0.79 times relative within the industry. This suggests a potential market detachment, as Sinopec Engineering Group Co. Limited trades at discounted levels while the broader industry remains fairly valued, warranting deeper fundamental analysis. The leverage on the balance sheet appears elevated, with liabilities of 61% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The company have a dividend yield of 6.15%. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline in a company can be attributed to various factors. On the positive side, revenue growth is driven by technological innovation and engineering services, international operations with greater openness, and large-scale projects such as Aramco Huajin project. The EPC contracting segment has also seen a significant increase of 21.6%. Overseas revenue has increased by 71.9%, while petrochemicals have grown by 11% and oil refining by 3.9%. On the other hand, revenue decline is attributed to the engineering, consulting, and licensing segment, which saw a decrease of 5.1%. The construction segment also experienced a decline of 9.9%, while equipment manufacturing decreased by 1.6%. Additionally, gross profit decreased due to less than expected progress and effectiveness of individual construction projects. The drivers of revenue growth or decline are influenced by various factors such as obtaining new projects, exchange rate fluctuations, decreased orders from major clients, and resource supply and price variations. These factors can have a significant impact on a company's revenue growth or decline, making it essential to monitor and adapt to changes in the market. The net income of the company experienced a significant decline between 2024 and 2025, decreasing by 27%. This substantial drop in net income was accompanied by a decline in profit margins across various categories. Gross profit margin decreased from 8.3% in 2024 to 7.4% in 2025, indicating that the company's ability to maintain its pricing power and control costs has weakened. Similarly, operating profit margin dropped from 2.7% to 1.8%, suggesting that operational inefficiencies or increased expenses have taken a toll on profitability. The net profit margin also saw a decline, falling from 3.86% in 2024 to 2.92% in 2025. This decrease in profit margins is consistent across all categories, indicating a broader issue with the company's financial performance. The reasons behind these declines are not explicitly stated, but they suggest that the company may be facing increased competition, rising costs, or operational challenges. The company's financial performance indicates a strong ability to generate cash from its operations. According to various sections of the report, the company's operating cash flow is consistently positive, with figures ranging from Rm 18.265 billion on page 12 to a smaller but still positive amount of Rm 8,395,544 on page 114. This trend continues into both 2024 and 2025, as stated on page 180. The overwhelming evidence suggests that the company is successfully generating positive operating cash flow, a key indicator of financial health. The company's debt level has undergone significant fluctuations over the years. Initially, it increased by a substantial 19.1% in 2024, reaching RMB 9.472 billion, page 45. However, this trend was short-lived, as the debt level decreased significantly to $8,255,000 by page 166. The company's financial situation improved further with an increase from RMB 572,333 to RMB 1,266,510 by page 184. In terms of interest expenses, there have been mixed trends observed. While it was slightly higher in 2025 compared to 2024, page 114, other periods saw a decrease. For instance, the company experienced a significant drop from 68,008 to 68,474 by page 143. Additionally, interest expenses decreased by RMB 13,937 from RMB 43,341 to RMB 29,404 by page 173. However, there was no significant change observed in another period, page 180. The financial performance of various segments and regions within the company has been mixed. On a positive note, EPC contracting has consistently reported revenue growth and improved profitability, while engineering, consulting, and licensing has seen improvements in quality and speed with a diversified layout. Equipment manufacturing also reported revenue growth and positive segment results. In contrast, construction has struggled with declining revenues and significant operating losses. Additionally, engineering, consulting, and licensing saw a decline in revenue and decreased profitability. International markets, which account for 1/3 of the portfolio, have not been explicitly mentioned as performing well or poorly. On a regional level, Saudi Arabia is highlighted as a location for 2 relevant projects, but no regions are explicitly mentioned as performing poorly. Overall, while some segments and regions have shown improvement, others continue to face challenges in terms of revenue growth and profitability. Management is optimistic about the company's future prospects, citing steady growth in market scale and new orders signed. The long-term strategy aims to exceed RMB 100 billion in revenue by 2035, with a significant portion coming from overseas business. To achieve this goal, the company plans to invest in high-quality development through strategic acquisitions, sales, and exploration of new markets. The management is also committed to accelerating technological innovation, product research, and business transformation in both domestic and international markets. A key focus area is digital and intelligent transformation, with a vision to become a world-class technology-driven engineering enterprise by 2030. This ambitious strategy underscores the company's commitment to staying ahead of the curve and adapting to changing market conditions. The company has a history of paying dividends to its shareholders. As stated on page 12, the company's dividend policy is clearly outlined with specific details regarding total dividend per share, final dividend, and special dividend. This indicates that the company prioritizes returning value to its investors through regular dividend payments. Furthermore, as mentioned on page 50, the company has also paid an interim dividend for the 6 months ended June 30, 2025. Additionally, it proposes a final cash dividend and special cash dividend for 2025, demonstrating its commitment to rewarding shareholders with a portion of its profits. That concludes the financial summary for Sinopec Engineering Group Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.